Welcome to the end of day review for Wednesday, the 13th of December 2023, starting off with the economic calendar. For the London session in particular, we had GDP news release for the British pound. This was negative for the GBP, and thus any long positions were invalidated during the session, and the primary focus would have been on shorts if it aligned with your technical analysis. In terms of the New York session, it was PPI that came out 30 minutes into the start of the New York session, and this essentially meant that we could long GBP USD, provided it, of course, aligned with our technical analysis bias. Um, Overall, the news release was quite mixed between GBP and USD, with them not both aligning. However, for the session we are trading, we will focus on the latest news release, and then obviously later in the day, quite late after the session, well, the cross ends. During the New York session, there is the federal funds rate and some FOMC statements that have extremely high impact and generally what drive the majority of the move for the day. So for these particular news releases, we don't generally want to have any trades open, and thus at the end of the London cross, it's probably best to open to close any open trade positions. Jumping straight into the chart for the 4 hour in specific, I guess, market structure remains bullish and confirmed bullish in that regard. Um, since then, we've essentially tapped the pro trend extreme, marking potentially the end of the pullback phase. However, the end of the pullback phase will be validated once we body break the pullback phase OB, which was body broken as a result of what do you call this, the US interest rates, and thus we can conclude that going forward, the pullback phase has officially ended, and anything to the left within this leg can be considered catalyst for pullback. In terms of where we started off during the morning, we essentially were in this range. Then once we had the GDP news release, you can see we came to the downside as anticipated. Yeah, and then since then, obviously, we traded long. Yeah, and then from that point onwards, it was just managing which leg you actually are in. From a 4H perspective, you can see we have this 4H primary leg, which was validated as a result of wicking this 4H chalk level, which then validated this 4H pro-trend primary leg from which we could long from. Jumping on to the 15-minute, what you can see is yesterday a secondary leg was developed. However, the secondary leg is then invalidated once we come into this pro-trend primary leg OB, just because in terms of for the purposes of trading this 4H last point of supply, we can't trade against any pro-trend OBs, and thus even though there was IRL, the last point of IRL was taken out, so shorts were invalidated. And then in addition, we had this jock level on a 15-minute, which validated a pro-trend secondary leg, and the validation of this new secondary leg invalidates the previous secondary leg, and thus our primary focus was for longs. Coming into the session, there wasn't any scope for generating a new secondary leg, given that whatever is to the left is considered, a secondary leg and not a primary leg. So we can't really back our secondary leg from anything. And then in addition to this, in terms of extending the secondary leg, it would either have to be that we body break right here, or we essentially reset the secondary leg by wicking this level. It was quite far-fetched, and thus, as a result, my primary bias for the day was the longs, purely focused on any long positions within there. However, like I said, upon the Frankfurt Open, we had the GDP news release, which was negative for the pound, and thus any long positions were invalidated for the London session. However, once we came into the New York session, we then had PPI, which was negative for the new USD, suggesting GBP USD longs. And based on this, we essentially had scope for longs. We can consider the fact that we do have this London range, however, that was broken when the PPI news release happened, and thus previous session range liquidity was no longer a consideration. Sorry, I'm just waiting for the charts to come back. Which then leads me to this long position that I did open, but it was a loss. So if we go into the 5 minute, what you can essentially see is that we had full order flow validation right here. So you have your chalk level right here on the 5 minute, and then you have demand holding, creating that new secondary leg on the 5 minute, and it's also visible on the 15 minute. On the 5 minute, we do have validated order flow control, we have a London low of the day, and thus everything aligned in terms of actually taking this long. We have liquidity in the leg right here. We could have positioned ourselves right here, but it was a matter of, okay, well, if this is liquidity, given that it's potentially mitigated, all of this is probably liquidity coming to the extreme. So for that reason, I decided to enter on that being the liquidity in the leg. As you can see, we actually respected, came back up. At this point, there was a chance that we'd actually continue. However, we then came and made a new London low of the day. Sorry, New York low of the day. Well, there was scope for this New York low of the day to actually be traded based on the fact that, we have a positive news release to back up the longs. It didn't make sense given that we were at the end of the trading session and we had this, highly significant trade follower news coming up. And we certainly didn't want any positions open. And like I mentioned, if you did have open positions, you probably want to close them out at around the end of the cross, which would have been around here. Anyway, you would have taken that loss. In terms of what happened upon the news release, which is at 9 p.m. my time, you can see we had this huge spike, even though the interest rates were expected to remain flat. And that's largely because it's probably actually being the momentum to validate what this initial news release was. In terms of actually catching the long, it wasn't really possible. So you've got a new New York low of the day. You got your chalk level, but at no time this price actually returned back in, and we just skyrocketed to the upside, marking the end of the day. Um, and yeah, so essentially you close off with -1 hour. Like I said, there wasn't really scopes to support shorting um, during the New York session, and in the actual London session, while the news supported shorting, um, given the secondary legs at play, it wasn't possible. Excuse me, it wasn't possible to actually um, short from a technical analysis bias, which is fine. So that marks the end of day review for Wednesday, the 13th of December 2023.